Hey, what's up, guys? Recently, Warren Buffett gave his presentation at Berkshire Hathaway annual meeting, and there are some very important points that we have to pay close attention to. In this video, we will take a closer look at Warren Buffett's economic outlook, and he will explain why the economy might get worse. Productivity of our economy is already dropped significantly, velocity of money decreased, and many businesses went bankrupt. Most importantly, that many middle-class American people lost their jobs. Nearly 3.2 million laid-off workers applied for unemployment benefits last week as businesses shut down caused by this outbreak, and makes the worst U.S. economy collapse in decades. The highest number of unemployment claims was last week of March. 6.9 million people claimed for unemployment benefits. Since then, the number starts to slowly decline week by week, but the total number of unemployment claims is still unprecedented. At least 33.5 million people have now filed for jobless benefits in the last 7 weeks, as millions of businesses closing their doors, bringing the U.S. economy to lower and lower levels. Currently, U.S. population is at 328 million people. But if we exclude all the elderly, children, and other population groups that for some reason aren't able to work, the total number of working force in the United States is 160 million people. 33.5 million lost their jobs in just last 7 weeks. So if we do some simple math, 33.5 million divided by 160 million, that is 20% unemployment rate. And worst thing is yet to come. This is still not the end. We have not seen anything like this in the recent history. If we go back all the way till 1929 Great Depression, unemployment rate skyrocketed all the way till 25%. This was the highest level in the history in the United States. In 2-3 weeks, the current unemployment rate can surpass 1929 numbers. In the recent Berkshire Hathaway annual meeting, Warren Buffett expressed lots of concerns about our current economy. Let's take a look.
The range of probabilities or possibilities and on the economic side are still extraordinarily wide. We do not know exactly what happens when you voluntarily shut down a substantial portion of your society. In 2008 and 2009, our economic train went off the tracks. And there were some reasons why the roadbed was weak in terms of the banks and all of that sort of thing. But the train went. This time we just pulled the train off the tracks and put it on a siding. And I don't really know of any parallel in terms of a very, very, well, the most important country in the world, most productive, huge population, in effect, sidelining its economy and its workforce, and obviously and unavoidably creating a huge amount of anxiety and changing people's psyche and causing them to somewhat lose their bearings in many cases, understandably. This is quite an experiment, and we may know the answer to most of the questions reasonably soon, but we may not know the answers to some very important questions for many years. So it still has this enormous range of possibilities.
I like the analogy how Warren Buffett explains what really happened in the economy in simple terms. In 2008 housing bubble, our economic train went off the tracks. There was a number of reasons why that happened, such as high leverage banks were playing around with toxic derivatives. Unemployment rate was 10 times less than the current rate. Only around 3 million people filed for unemployment benefits back in 2008 till 2009. But right now, we pulled the entire train off the track and put it aside. No wonder why unemployment rate is 10 times higher. This domino effect can potentially build the momentum if the economy remains closed. The current stock market does not really reflect what is going on in our economy, but the momentum in the market starts to disappear as well. If you look at S&P 500, it recovered by 30% since March, when the market dropped from $3,400 to $2,200. Right now, S&P 500 is around $2,900, but we did not really see that V-shaped recovery as many investors were predicting. In fact, the market slowly loses the momentum and is currently forming a concave down parabolic shape, which may lead to more downside. We do not know what is really going to happen to the market in the near term, and Warren Buffett indeed confirms that there are lots of uncertainty in the market at this time.
I don't know, and perhaps with a bias, I don't believe anybody knows what the market is going to do tomorrow, next week, next month, next year. I know America is going to move forward over time, but I don't know for sure. And we learned this on September 10th, 2001, and we learned it a few months ago in terms of the virus. Anything can happen in terms of markets. And if you can bet on America, but you have to be careful about how you bet, because simply because markets can do anything. On October, whatever it was, in 1987, October 11th, I believe, Monday, markets went down 22% in one day. In 1914, they closed the stock market for about 4 months. After 9/11, closed the market for 4 days. We hustled to get it going again. But nobody knows what's going to happen tomorrow.
As of Q4 2019, Berkshire Hathaway reported $128 billion in cash. The pile of cash has never been as high in the history of Berkshire Hathaway existence. We know that Warren Buffett likes to buy great companies at fair prices. This is exactly what he did during 2000's dot-com bubble. We can tell this by looking at this chart, that his cash position was very, very low. Similar thing happened during 2008 housing bubble. When stock market dropped by 50%, his cash position dropped respectively, which means he was deploying lots of cash to work. During that time, his total cash and cash equivalent position dropped so close to $20 billion. But ever since, the cash increased almost 7x to the current time. In the recent Berkshire Hathaway annual meeting, he indicated that currently they have $137 billion in cash, which increased by $9 billion from the last quarter. But many investors believe that Warren Buffett would buy more stocks as stock market declined by more than 35% in the recent drop. However, Warren Buffett did not buy anything. In addition to that, he was a net seller. He sold $9 billion worth of equities. Let's take a look at this quick video how Warren Buffett can justify his large cash pile.
Warren, why are you recommending listeners to buy now, yet you're not comfortable buying now as evidenced by your huge cash position?
Well, as I explained, the position isn't that huge when I look at worst case possibilities. I would say that there are things that I think are quite improbable, and I hope they don't happen, but that doesn't mean they won't happen. We don't prepare ourselves for a single problem. We prepare ourselves for problems that sometimes create their own momentum. I mean, 2008 and 2009, you didn't see all the problems the first day when what really kicked it off was when the Freddie and Fannie, the GSEs, went into conservatorship in early September. And then when money market funds broke the buck, I mean, there are things that trip other things, and we take a very much a worst case scenario into mind that probably is a considerably worse case than most people do.
Warren Buffett said that his cash position isn't that huge. Well, I don't know about that. Cash is a new all-time high record. In fact, if you look at the balance sheet, the total equity position is at $375 billion as of Q1 2020. And the cash position is at $137 billion, which means he holds 27% of his total portfolio in cash. I believe his balance sheet speaks for itself. Pay close attention to what Warren Buffett does and not necessarily what he says. Instead of following his own principle and buying more and more stocks when everyone is selling, he did the opposite. He sold his entire stake in airlines and other stocks. Buffett confirmed that he sold all of his stakes in the 4 largest US airlines. His position in United, American Airlines, Southwest, and Delta Airline was sold at $6.5 billion. Buffett originally invested close to $80 billion back in 2016, so they lost close to 25% on the airline stocks for the past 4 years. Let's take a look at what Warren Buffett had to say about selling airline stocks.
The airline business, and I may be wrong, and I hope I'm wrong, but I think it changed in a very major way, and it's obviously changed in the fact that the 4 companies are each going to borrow, perhaps an average of at least 10 or 12 billion each. Well, you have to pay that back out of earnings over some period of time. I mean, you're 10 or 12 billion dollars worse off if that happens. And of course, in some cases, they're having to sell stock or sell the right to buy a stock at these prices, and that takes away from the upside down. And I don't know whether 2 or 3 years from now that as many people will fly as many passenger miles as they did last year. They may and they may not. But the future is much less clear to me about how the business will turn out through absolutely no fault of the airlines themselves. But something that was a low probability event happened, and it happened to hurt particularly, whether it's the travel business, the hotel business, the cruise business, the theme park business, but the airline business in particular. And of course, the airline business has the problem that if the business comes back 70% or 80%, the aircraft don't disappear. So you've got too many planes, and it didn't look that way when the orders were placed a few months ago, or when arrangements were made. But the world changed.
There are lots of uncertainties how our economy and especially airline companies will look for the next few years. Consumer confidence has changed. This outbreak will make scars in consumer mind for a very, very long time. I believe Warren Buffett made the right call by selling airline companies. There are lots of more downside will come in this industry. Actually, let's take a deeper look into US airline travel business. This CNBC clip did a very good job explaining why this business is not where you want to be.
U.S. air travel has dropped 95% compared to last year, and the number of flights scheduled globally is down by 63%. The insides of airports are empty, but outside is another story. While some airlines have started transporting cargo on passenger planes, more than 2/3 of the world's commercial aircraft are grounded. Never before in history have airlines had to ground so many planes so quickly.
Our customers have come to us and said, look, we're parking literally hundreds of aircraft per day, and logistically, it's very, very complex. This is a particular difficult time, and we've created a particular app that literally allows them to virtually park the aircraft.
With no demand for flights, Delta and United reported their first quarterly losses in more than 5 years. American Airlines told CNBC its revenue is down 90% from a year ago. Parking hundreds of aircraft is also adding to their losses. These planes can't just sit idle. They need routine maintenance and a place to be stored. And when you suddenly have thousands of planes with nowhere to go, it becomes a logistical nightmare. Before, the airplanes were where they were meant to be, in the air. At certain times of the year, there could be as many as 20,000 planes in flight at the same time around the world. At the end of 2019, the global air fleet was nearly 24,000, and now more than 16,000 of those massive machines need a place to park. Aircraft storage facilities have been around for decades, but never in history has the aviation industry had to park so many planes at once. Airlines are having to get creative about finding space for planes. A recent flyover of a storage facility in Victorville, California, shows planes fit together like puzzle pieces on unused runways. Victorville is well known as one of the world's biggest airplane boneyards, a storage location for out-of-service or old planes. It was already storing Southwest's fleet of Boeing 737 MAX 8s, but it's now storing hundreds of other aircraft due to the lack of demand in air travel. Victorville, along with boneyards in Roswell, New Mexico and Tucson, Arizona, are currently the top 3 locations for parked aircraft. They've collectively stored 800 planes so far. These aircraft cost hundreds of millions of dollars, and maintaining them is not cheap. Even when parked, they need to run the engines, cycle fluids, and move the tires among many other checklist items. This is why some airlines are flying with just a few passengers aboard, just to keep them running. When airlines know the plane is going to sit for months at a time, they're sent to the desert because the dry climate helps prevent corrosion. Etihad Airways, for example, returned over 100 planes to its main base in Abu Dhabi, where it sealed up engines and sensors to prevent things like sand from getting into critical areas.
They're a very intricate, complex piece of machinery. It's not like parking a car.
Boeing told its shareholders that air travel could take 2 to 3 years to return to normal. Airlines have had to consolidate fleets to cut back on costs.
International travel has been hurt the most, and with good reason, and it's very difficult now to travel between countries. This means that long-haul aircraft, which are generally what we call twin aisles or wide bodies, are going to suffer more than single aisles like the 737 and A320. The A380, the big double-decker that Airbus launched, a little bit over a decade ago, every one of those is on the ground. 100% of the A380s are parked today. The larger it is and the older it is, the more it suffers.
Airlines have seen incredible losses, and analysts don't expect that to stop anytime soon. Like many businesses, large and small, they are in survival mode and looking for ways to conserve cash. Lack of demand could lead to canceling or deferring future orders from manufacturers. Airbus and Boeing have already cut back on production, and both companies are planning to slash jobs. As for the thousands of aircraft parked around the world, retirement could come much earlier than expected.
Revenue of the airlines is down by more than 90%. Despite the revenue being down, the cost of routine maintenance of aeroplanes is very expensive. Just a terrible business model in general. Warren Buffett did not believe in the airline business from the beginning of his investment career, and now he confirmed that he was wrong about buying airlines in the first place. Despite the airlines, his cash position drastically increased in the downside market, which may mean only one thing: there could be more downside in the market. Let me know what do you guys think about Warren Buffett and his new cash pile. Leave your thoughts in the comment section below, hit that like button and subscribe.